Hi, Jonathan York from Our Financial Partners, looking at the investment markets. Obviously, the big news is at the 11th hour pausing of the attack of US onto Iran. Now, quite interesting, both sides claiming sort of victory in this. Certainly the US has agreed to pause for 2 weeks its attack on Iran. And on the other side, Iran has agreed to open up the Straits of Hormuz. Be a pretty fragile deal because Israel claims that it doesn't apply to them and they are still bombing, which really does throw a bit of a spanner into the works. Because certainly Netanyahu needs to be brought into line to make this ceasefire work. But I say it was really an 11th hour sort of deal brokered by Pakistan because Trump previously had been sort of ratcheting up the rhetoric and threatening to sort of wipe out a civilization. So on the back of that, markets rallied pretty hard, equities were up, interest rates were down, and obviously oil fell dramatically. So potentially this does give sort of Trump a way out of this sort of conflict because, it looks like he was sort of dragged into it by Netanyahu and Israel. And, really the US public appear to have little appetite for a further foreign war. And obviously the implications on the US economy and the global economy with oil trading up aggressively. Before the conflict started, WTI was trading sort of low 60s. We did get up to as high as $115 a barrel. But it will be quite interesting now as well to see what sort of happens to the US economy because the latest jobs data was quite interesting. It came in at 178,000. Which was much higher than sort of expected. They were looking for around 55,000. But then on the flip side, the February number was revised down to 133,000. So net still shows a relatively sort of weakish employment side for the US economy, which does tend to tie in with the guidance that was given from the latest reporting season of sort of layoffs. Now, what will be interesting as we approach the next sort of earnings season, just to see the first, obviously, the reporting, but also as well the guidance going forward, because this will then start to sort of incorporate the impact of the Iran war. Because certainly Trump still appears to be sort of falling in the polls. And he sacked his Attorney General, Pam Bondi. And that was supposedly because of a lack of sort of progress in sort of prosecuting his political enemies. But the biggest issue was that is when the cases actually got to court, there was no credible evidence and the case was just getting thrown out, which obviously didn't please Trump at all. So on the back of these sort of pause in hostilities, they say US rates have fallen quite dramatically. 10-year is back at 423. The 2-year is 375. And that 30-year is back at 482. And what's quite interesting as well, the latest minutes from the Fed still indicated the Fed was still looking for a potential rate cut later in the year. Now, obviously, near-term inflation is going to rise because of the rising energy costs, but it's just going to be very interesting to see how much of that is sort of passed on, and also as well how much of that sort of inflation actually sticks in the economy. Now, potentially, it looks like Trump could see another adverse ruling from the Supreme Court on the birthright children issue. So as mentioned, oil has fallen dramatically. WTI is back around sort of $95 a barrel. Brent has fallen as well. It's just going to be very interesting to see how that sort of plays through over the next sort of 2 to 3 weeks, especially as no further progress is made in the talks. Now, obviously, the falling oil prices is good news for the UK economy. It really has been suffering. Potentially, the Bank of England still would like to cut interest rates to stimulate the economy, but with rising inflation on the back of the energy costs, it's going to be a pretty tough sell. Now, in the EU, Germany was one of the first countries to actually introduce fuel rationing. And it'd just be interesting to see if that is still in place now that you've got this sort of pause in hostilities. But all the time, obviously, as well for Europe, you've still got the Russia-Ukraine war, which is well into its 5th year now. Now, in Australia, a little bit of better news on the CPI. That came in at plus 0.2, which was for February, which was slightly weaker than anticipated. Potentially as well, the Australian government has offered some short-term relief with a little bit of reduction in the duties for fuel. Now, here in New Zealand, as expected, the Reserve Bank left rates unchanged. OCR remains at 2.25. But obviously, no one expected any change in rates, but it's really all about the commentary, and that sort of highlighted the potential issues with the Middle Eastern conflict and the rising energy costs. But if you look at it, the rising costs are already impacting the consumer out there, and sort of raising rates and hitting the mortgage rates would really be a double whammy. But potentially a little bit of good news, as Fonterra should see that payout from its mainland sale later this month. And potentially that puts more disposable income into the economy. So certainly nervous times out there, as discussed before, the New Zealand economy was really showing some reasonable sort of signs of, potential sort of growth going forward. And then you've got the energy impact, and it's really sort of knocked it for 6. So really, still pretty tough times out there for the New Zealand economy. The Reserve Bank meets again on May the 27th, but more importantly, the next inflation data comes out on April the 21st. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.